Could Ethereum really surge past $12,000 in the next 90 days? Could Bitcoin reach $250,000 before the end of the year? According to Wall Street strategist Tom Lee, that's exactly what's coming. Lee believes the next phase of this market will catch everyone off guard, not because of hype, but because of how fast traditional finance, tokenization, and blockchain adoption are converging. In his latest interview, Lee laid out a vision where Bitcoin becomes digital money and Ethereum becomes the global engine for compute, a financial internet that Wall Street, AI, and entire economies are beginning to build on. He's also predicting a massive 2026 boom fueled by new tokenized equity markets, blockchain security breakthroughs, and Tether's explosive rise as the central bank of crypto. In this video, we're going to break down Tom Lee's bold 2025 and 2026 predictions, from Bitcoin's potential run to $250,000 to Ethereum's move toward $10,000 to $12,000, and the huge role tokenization, security, and political alignment will play in the next phase of this bull cycle. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, let's begin.
By year end, our target for Bitcoin is 200 to 250,000. And for Ethereum, somewhere between 10 and 12,000 each.
Tom Lee has once again made one of the boldest calls on Wall Street. His target for Bitcoin sits between $200,000 and $250,000 by year's end, with Ethereum following close behind in a range of $10,000 to $12,000. His reasoning follows his long-held framework that every major bull cycle in crypto has coincided with a global liquidity expansion, rising risk appetite, and an explosion in new on-chain use cases. With rate cuts now in motion and trillions of dollars in liquidity beginning to return, he believes 2025 will deliver the same parabolic conditions that pushed Bitcoin to new highs in every previous cycle. This time, the setup looks even stronger. The approval of multiple spot Bitcoin ETFs earlier this year has opened the gates for traditional capital to flow in at scale. According to data from Bitwise and ARK Invest, over $200 billion in institutional demand could flow through ETFs over the next 18 months. At the same time, Bitcoin supply is tightening faster than ever. Only about 2.5 million coins remain on exchanges, and miners are holding instead of selling. Ethereum, on the other hand, has become structurally deflationary. Since the merge, more Ethereum has been burned than issued, creating one of the hardest digital assets ever designed. Lee argues that these fundamentals now make it realistic for Bitcoin to trade like digital gold on a global level, while Ethereum becomes the backbone of decentralized computation and tokenized finance. He believes that as new investors enter, price targets that once seemed unrealistic will begin to look conservative. The pattern is familiar: disbelief first, followed by rapid repricing once momentum builds. If Lee is right, both Bitcoin and Ethereum are still in the early stages of what could become the biggest rally of this decade. If that sounds extreme, it's worth remembering that similar disbelief surrounded Bitcoin's $10,000 call in 2017, which ended up looking small months later. What comes next in Lee's thesis explains why he sees both networks not as competitors, but as complementary engines of the new digital economy.
If Bitcoin is money, ETH is compute, how does that land with you?
Yeah, I mean, I think that they're complementary. So one is not a replacement for the other. And in a way that's part of our framework. You know, when we think of digital money and digital gold, that's Bitcoin, and that's already been well established, you know, and in fact, that's why many investors will own Bitcoin. But Ethereum is an architecture that we can see Wall Street building on, and AI, and it's not that different than how in 1971 there was two forks, you know, gold, because the dollar went off the gold standard of gold, became that store value. But then a whole economy was built around making sure the dollar, which was now synthetic, became the standard bearer. And that's what Wall Street did. And in terms of value creation, both created value. You know, gold is now a $2 trillion network value, and equities, which is really came out of a synthetic dollar, right? We didn't want us to go onto a Deutschmark or yen standard. That's a $40 trillion asset. So I think both come out of crypto, but address different markets. So I think Ethereum can grow even without having any cannibalization or competition with Bitcoin.
Tom Lee believes Ethereum and Bitcoin are not competitors at all. They're complementary forces that will define the next phase of digital finance. Bitcoin, in his framework, represents digital money and digital gold, the foundation layer of value. Ethereum, on the other hand, is the architecture Wall Street, artificial intelligence, and global finance are preparing to build on. Both can rise together, just like gold and the dollar did after 1971 when the US left the gold standard. Back then, gold held its role as the ultimate store of value, while the dollar became the new vehicle for economic expansion. Lee sees Bitcoin and Ethereum following that same path, but this time in a purely digital economy that's still in its infancy. The numbers behind that vision are staggering. Bitcoin's network value now exceeds $1.5 trillion, rivaling the biggest commodities on Earth. Ethereum's value, around $500 billion, already surpasses the market cap of JP Morgan, and yet it's still early in terms of global adoption. What gives Lee confidence is the growing alignment between crypto and traditional finance. BlackRock's tokenized US Treasury Fund, BUIDL, now runs on Ethereum, settling transactions in seconds while earning real yield. Banks like JP Morgan are testing tokenized collateral on the same rails, and major corporations are quietly experimenting with blockchain-based settlements for everything from carbon credits to international trade. Lee believes this convergence will unlock value far beyond today's forecasts. Bitcoin becomes the trusted foundation, Ethereum becomes the digital infrastructure, and both assets expand together as institutions begin building on-chain at scale. For him, that's not competition, it's synergy that will drive the next $1 trillion into crypto. But to understand why he's so confident the world is ready for this transformation, we need to look at the one thing that's still holding markets back: sentiment.
I think it's good to see Bitcoin at all-time highs as we're entering the fourth quarter and not correcting or in the 90,000 level, because we are in that seasonally strong period and the Fed is easing monetary policy. So I'd say it's good to see an all-time high because this is confirmation. And of course, it's only early October, and I think there's still room for upside into year end.
In 2017, crypto was fueled by pure excitement. In 2021, it was mania. Today, it's hesitation. He believes the market still hasn't fully accepted that a new bull cycle has begun. Despite Bitcoin breaking above its previous all-time highs and Ethereum strengthening again, sentiment remains muted. On Fundstrat's internal measures of investor positioning, optimism is still far below what was seen during the last peaks. Lee attributes part of this to the political and economic divide within the United States. The uncertainty around policy, leadership, and regulation has created an environment where investors are cautious even when the setup looks historically bullish. That hesitation, however, is exactly what Lee says fuels long-term upside. In every past cycle, Bitcoin's largest gains happened when sentiment was neutral or even negative. In his words, the best bull runs begin when no one believes they can happen. He also agrees with other analysts that crypto's next phase depends on appealing to both political sides. If the industry stays bipartisan and regulatory clarity continues to improve, capital will pour in from funds that have been waiting on the sidelines. The data supports that shift. In the second half of 2025, crypto donations, lobbying, and political engagement have reached record highs, signaling that the industry is maturing fast. Lee expects that once the broader market recognizes how much political momentum and institutional legitimacy crypto has gained, sentiment will flip rapidly. At that point, the skepticism that has kept many investors out will turn into panic buying. For Lee, that's when the real parabolic stage begins, when disbelief turns into FOMO, and FOMO turns into the next wave of exponential gains. But sentiment alone can't explain what's powering this resurgence. Lee says one company, more than any other, has quietly become the central bank of crypto itself. And if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in.
Tether has been the central bank for crypto. I mean, in 2017, if we go back, they were incredibly novel and ingenious. I mean, they were Bitcoin holders, but they've proven that they're not just Bitcoin OGs. They created a business that acted as a central bank, and I think even companies or entities like Binance, et cetera, wouldn't really have existed without the existence of Tether. And in the ensuing years, Tether has actually increased its circulating supply. If you look at how much Tether has grown, its usefulness is growing as crypto has expanded, and even as crypto has become more regulatory accepted, Tether's growth rates accelerated. So to me, I think it's pretty evident Tether is a growth company, and at 500 billion, it might actually be a bargain. I mean, we should maybe think about the fact that Tether, when does Tether flip JP Morgan as the largest bank in the world? And I don't know Tether's financials, but because of how much growth they've achieved just even in the last few years, I think we have to realize that this may be, as Arthur says, one of the best banks in the world.
Tom Lee calls Tether one of the most ingenious creations in financial history. He says that without it, the entire modern crypto economy might not exist in its current form. Back in 2017, Tether was an experiment, a digital dollar designed to give traders stable liquidity between Bitcoin and altcoins. Today, it has become the dominant source of liquidity across all of crypto, with a market capitalization above $120 billion and growing. According to Lee, Tether effectively operates as the central bank of the digital world. It manages reserves, issues digital dollars, and provides the deep liquidity that allows every exchange, broker, and decentralized protocol to function smoothly. He points out that Tether's growth has accelerated even as regulation has tightened and mainstream acceptance has grown. In 2024 alone, Tether added over $50 billion in new circulation, outpacing the balance sheet growth of some of the largest US banks. For Lee, that's a sign of real demand, not speculation. Traders, companies, and even some nations are using Tether as a settlement instrument in global trade, from Turkey to Brazil to parts of Africa where dollar shortages persist. This rise of dollar-backed stablecoins has turned crypto into a parallel financial system, one that operates 24 hours a day, moves trillions in value annually, and functions without traditional banks. Lee even argues that Tether might one day rival JP Morgan in financial influence if this pace continues. He estimates that at a $500 billion market cap, Tether could still be undervalued given how essential it has become to digital markets. To him, that's the signal of maturity, not risk. And as confidence in centralized institutions continues to erode, Lee believes the security and transparency of blockchain systems will only strengthen the argument for why this space is becoming indispensable.
I mean, today, I might say that today blockchains look a lot more attractive because of the security risks of centralized software entities. You know what I mean? Like, I think cyber hacks are becoming so visible, and companies are getting crippled, and which is maybe raising the need and the benefits of actually having public blockchains, for finality. And maybe that's part of the hidden message, because I think 7 years ago, even if the administration was friendly, it's not like a bunch of people would have been wanting to issue stable coins or build a new business on the blockchain, or at least show it. But I think today it's really in demand now.
Tom Lee believes one of the most overlooked catalysts for crypto adoption is not speculation or yield, it's security. He argues that the world has reached a breaking point with centralized software systems. Every year, new data breaches expose the private information of millions. Major corporations lose billions to hacks and ransomware, and governments are struggling to defend even their most critical databases. In Lee's view, this chaos is driving companies toward blockchain technology, not out of curiosity, but out of necessity. The reason is simple. Public blockchains like Bitcoin and Ethereum have never been successfully hacked. After more than a decade, their track records for uptime, transparency, and security are unmatched. Lee says this shift in mindset has been accelerating quietly. Where a few years ago, enterprises were experimenting with private blockchains behind closed doors, they're now testing real deployments on public networks. Firms like Franklin Templeton are tokenizing mutual funds on Ethereum. Visa and PayPal are integrating stablecoin payments directly into their systems. Even governments are studying blockchain-based registries for property, identity, and cross-border settlements. What was once dismissed as too volatile or too technical is now being recognized as the safest foundation for digital infrastructure. He sees this as the next phase of crypto's institutionalization. Instead of companies running away from blockchain due to regulation, they are being pulled in by the promise of greater security and efficiency. As cyber attacks continue to rise globally, blockchain's immutability has become its greatest advantage. In Lee's words, it's not about convincing the world anymore, it's about the world realizing it has no better option.
And then for the industry, I'd love to see some innovation around the betting markets and tokenized equities. I think that could be a 2026 thing.
Will we see a tokenized Bitmine?
I'm less incented to tokenize Bitmine because I think what's more important is to see tokenizing a company so that we can extract and identify the portions of value. Like I'd rather see NVIDIA tokenized and then traded as if we can own NVIDIA's China revenue streams or its Blackwell sales, and then using prediction markets to actually hedge that. So we could be betting against Fed tightening and the implications for its margins or Blackwell sales. So I think that's really what I think is exciting about tokenization.
Tom Lee believes the next great wave of crypto adoption won't come from meme coins or trading hype, but from something far bigger, the tokenization of real assets. In his view, 2026 could mark the moment when traditional equities, prediction markets, and on-chain finance converge into one digital marketplace. He envisions a world where investors can own tokenized shares of companies, not just as full stocks, but as fragments tied to specific revenue streams or regional operations. Imagine being able to hold a token representing only NVIDIA's China sales or a portion of its Blackwell chip business, and then use decentralized prediction markets to hedge or trade against global events like Federal Reserve policy or semiconductor demand. That's the kind of innovation Lee says will define the next cycle. BlackRock has already launched its BUIDL tokenized fund on Ethereum, while Franklin Templeton has begun offering blockchain-based share classes for real-world portfolios. In Asia, the Hong Kong Monetary Authority and Singapore's MAS are pushing for regulated tokenized bond and equity markets by 2026. The infrastructure is forming piece by piece, and it's building on the same networks Lee expects to dominate: Bitcoin and Ethereum. The result is a financial system that trades 24 hours a day, settles instantly, and removes layers of costly intermediaries. Lee thinks this could be the ultimate validation of crypto when the world's largest corporations and governments start issuing and trading assets natively on blockchain. He believes that once this shift takes hold, the value of blockchains themselves will reprice dramatically upward. Tokenization won't just add liquidity to markets, it will rewrite how markets operate. For Lee, this is the logical endgame of everything he's been predicting: a full-scale transformation of the global economy, where digital assets finally replace the old rails of finance. Anyway, guys, that's all we have for today. Thanks for watching, and I'll see you all in the next video.